What are the steps of underwriting in debt capital markets, DCM? Imagine a company seeking to raise funds through borrowing rather than selling equity. The process of turning this borrowing plan into a successful financial transaction involves several crucial steps that ensure the issuer's needs are met while providing investors with confidence. The first step is the initial assessment and structuring phase. Here, the underwriters, typically investment banks, work closely with the issuing company to understand its financial health, capital requirements, and strategic goals. They analyze the company's creditworthiness, industry position, and existing debt obligations. Based on this analysis, they help determine the optimal structure for the debt issuance, including the type of debt instrument, maturity period, interest rate structure, and any special features such as callable or convertible options. Following the structuring, the next step involves preparing the offering documentation. This includes drafting the prospectus or offering memorandum, which provides detailed information about the issuer, the purpose of the debt, financial statements, risk factors, and legal disclosures. This document must meet regulatory standards and is vital for transparency and investor confidence. Once the documentation is ready, the underwriters conduct a marketing process known as the book-building phase. During this stage, they gauge investor interest by soliciting indications of interest from potential buyers, including institutional investors and large financial entities. This process helps determine the optimal pricing and the amount of debt to be issued. The underwriters analyze the demand, adjust the pricing range accordingly, and prepare a final offer. The next step is the pricing and allocation phase. Based on the feedback from investors and market conditions, the underwriters set the final interest rate or yield, the issue size, and the allocation of bonds or notes to investors. This step involves negotiations and careful consideration to balance the issuer's funding goals with investor appetite. Finally, the issuance is completed with the settlement and distribution process. The bonds or notes are issued to investors, and funds are transferred to the issuer. The underwriters also handle post-issuance activities, such as ongoing investor communication, market stabilization if necessary, and ensuring compliance with regulatory requirements. Throughout these steps, the underwriters play a vital role in coordinating efforts, managing risks, and ensuring the debt issuance proceeds smoothly, ultimately helping the issuer access the capital needed for growth or other strategic initiatives.